President?
Senator from Utah.
Madam President, I ask unanimous consent that, that immediately following Senator Grassley and my colloquy that the distinguished senator from North Dakota be recognized for 30 minutes.
Without objection.
Oh, thank you, Madam Chair. Madam Chair, my colleague, Senator Grassley, and I come to the floor today to discuss some very urgent business for the American people that has frankly been put off for far too long. I'm talking about this the outstanding tax issues that this Congress has so far failed to address. And as I count them, there are 5 major tax issues that collectively represent a looming crisis for our economy. These are, first, the set of tax provisions that expired almost a year ago on December 31st, 2009, and have yet to be extended. Second is another set of important tax provisions that are due to expire at the end of this year, which is only 44 days from now. The third item is the need to once again address the threshold of the alternative minimum tax so that about 25 million more American families are not caught in its clutches for the tax year about to end. Fourth is the estate tax issue, which has been haunting us and the American people all year long. I submit that this is way past the crisis stage, but is about to enter into even a worse state. And finally, and certainly not least, is the looming expiration of the tax relief provisions we passed in 2001 and 2003, which are swinging over the future of our economy like a hangman's noose. It is this situation that I particularly would like to address the bulk of my remarks to, but before I do so, let me turn to my colleagues for their initial comments. And I can turn to my colleague, the ranking member on the Finance Committee, and great friend, Senator Grassley.
Senator Hatch, you've long been a leader in a lot of these tax provisions, and particularly in research and development, and I want to thank you for your leadership there. I think Senator Hatch has clearly outlined the gravity of the economic consequences of a continuing failure to finish time-sensitive tax legislative business. There's a chart I'm going to put up here that shows where we are on these categories of expiring tax provisions. Said just another way, here are the categories of tax hikes that congressional inaction will put in place. I've used this chart before, so I think a lot of people will be familiar with it. In fact, several months ago I used this chart as well. The congressional Democratic leadership paid no attention to the seriousness of these issues then. Unfortunately, the to-do list is exactly the same today as it was several months ago. If you go down through this chart, you can see that we have had partisan votes on extender packages negotiated between the bicameral Democratic leadership, but no effort to reach out to the Republican side to find bipartisan common ground. On this year's alternative minimum tax patch, as Senator Hatch noted, inaction on the AMT will force a gotcha tax hike on millions of middle-income families when they start to file their tax returns 6 weeks from now. On the death tax reform, the House passed a permanent reform almost 1 year ago, but it has languished in the Senate during that period of time since their passage. On the other side, we would like to improve that bill to protect more small businesses and farm families from the death tax. On the 2001-2003 tax relief packages, there is no bill from the other side that would serve as a starting point on preventing this massive tax hikes. On the other side, if the Democratic leadership permitted us, we would like to start with Senator McConnell's bill. Senator Hatch and I are co-sponsors of that.
Senator Grassley really has been the ranking Republican on the, or the chairman of the Finance Committee for a long time now. We've seen times when the expired or expiring tax provisions have not been dealt with, in as timely a manner as they should have been, but have we ever seen a state of affairs like we have now with the extenders? What has this meant for job creation and economic growth? And I'd like to hear from Senator Grassley on that.
Well, first of all, my colleagues probably know that my friend from Utah is going to advance as the incoming ranking member of the Senate Finance Committee, and I congratulate him on that, and I know that he's going to do a very good job there. To my friend, I say one needs only to look to the nonpartisan Congressional Budget Office to assess the harm that could be done to the economy if we don't get this tax legislation passed. According to the Congressional Budget Office, not addressing these very time-sensitive tax issues will reduce, and I want to emphasize that, will reduce economic growth by as much as 1.7% on the average for the years 2011 and 2012. If you didn't hear that, it's not some political leader saying that economic growth is going to be harmed by 1.7%. It's the nonpartisan experts in the Congressional Budget Office say that if we don't pass these tax bills, the economic growth is going to get hit 1.7%. Some private forecasters put that hit even higher at 2%. When you consider that the last report has the economy growing at an annualized rate of 2%, then it's quite obviously you can see that this single failure to prevent these great big tax increases could wipe out what little economic growth is currently occurring. I don't know how policymakers can sleep at night, let alone be so casual, when we haven't dealt with these time-sensitive tax issues at a time when coming back here, we heard nothing from our constituents other than concern about the economy, about jobs, and about the legacy of debt that we're leaving.
Listen to Senator Grassley. One of the real leaders in this body and somebody that we all look up to as totally honest and sensitive on these issues. He's done a wonderful job on the Finance Committee. But according to the Commissioner of Internal Revenue, perhaps the most time-sensitive problem waiting for congressional action is the so-called patch for the alternative minimum tax. Now, I understand that if we do not take care of this very soon, we could see major delays in the tax filing season that will start on January 1st. Now, is that your understanding, Senator Grassley?
Absolutely, absolutely. And we have track record on that. Just a few years back, it didn't get done in time, and people had to wait for their tax refunds. That's the most thing, but it also created a terrible bureaucratic problem for IRS to get the forms out. So my friend from Utah is correct. Fortunately, the chairs and ranking members of the tax writing committees wrote to the Commissioner of IRS last week indicating our intention to pass an AMT patch. The letter specified what the AMT patch would look like, but as helpful as that letter was, we still need to change the law. As a matter of fact, the filing season could become very complicated if we don't act. During our years in the majority, we never let the AMT patch legislation slip past May of any tax year that it applied to. And that only happened once. The death tax is another, Senator Hatch, is another overdue tax legislative piece, and it's referred, that's been referred to. Maybe Senator Hatch, you would bring up the issue of the estate tax.
Well, it's the third item on the to-do list. If we do not act in 6 weeks from now, the reach of the death tax will greatly expand. According to the Nonpartisan Joint Committee on Taxation, 10 times the number of estates will be taxable versus the number that would be taxable in the bipartisan Lincoln-Cow compromise. In the case of farm-heavy estates, 13 times the number of those farm families would be hit by the death tax. That'd be really unfair because the families would have to either borrow the money or sell the farm in order to pay the deck taxes. And that's just crazy. The issue of extending the expiring tax relief provisions enacted in 2001 and 2003, to move on to another subject, has been a central question all this year. But we are just now beginning to discuss this in earnest. This lack of action on this vital topic has been a major factor in the low performance of our economy. The outcome of this debate is exceptionally important to the future of this nation. Its implications go well beyond what many on the other side of the aisle or on the other side of this issue might want Americans to believe. This is not merely a question of how well the rich in our society will live if we raise their taxes. Rather, this debate goes to the heart of the burning questions facing American families of all income levels today. Will I keep my job? How and when can I get a new or better job? Will the economy grow enough to allow my family to pay its bills and make progress towards our dreams? Can we afford to educate our children? Will America continue to prosper in the years ahead, or are we in a permanent decline that some people think we're in? The President and most of my colleagues on the other side of the aisle have decided that the answer to the question of fully extending the tax relief provisions that are set to expire in just about 44 days is no. While they are willing to extend them for those Americans earning less than $200,000 per year, if a single individual, or $250,000 per year, if a family, their position is that anyone above these thresholds should get a tax increase. However, the right answer for our country's future is that all the tax relief provisions should be extended. The reasons the President and his allies give for their position largely boils down to the general supposition that the well-off among us can afford to see their taxes go up, and that the nation cannot afford to forego the revenue loss to the Treasury from these taxpayers continuing to have their taxes as low as they are. Ironically, the second point implies that we can afford the revenue loss from extending the tax relief to those making under $200,000 and $250,000 thresholds, even though this loss is upwards of 80% of the total amount of lost revenue from extending the tax relief for everyone. In other words, Madam President, the President and his congressional supporters would have us believe that this debate is solely about whether the so-called wealthy among us deserve continued tax relief. They either fail to see an economic connection between the finances of those at the top of the income scale and the rest of us, or they refuse to admit that such a link even exists. The plain truth, however, is that those most affected by allowing the tax relief provisions to expire are not the wealthy, but those Americans who depend on a strong and growing economy for their livelihoods. This may sound somewhat counterintuitive, but it is nonetheless true. The essential element to this conundrum is that good, permanent jobs, which are the heart and soul of the American dream, are inextricably linked to those in our economy who have wealth. When the income of the wealthy is taxed, particularly in a way that reduces the incentives for saving, investment, and entrepreneurship, that tax is not just paid by those who write the check to the government. Indeed, Madam President, even those Americans who pay no income tax at all, which is now upwards of half of all adults, can be badly hurt by tax increases on the so-called rich. This is through the loss of opportunities, the lack of jobs or better jobs, and slow or non-existent economic growth. Now, one vital fact that many citizens do not realize is that a high percentage of this nation's business enterprises pay their taxes through the tax returns of their individual owners. Taxes on sole proprietorships, partnerships, S corporations, and limited liability companies are all passed through these entities and assessed on their individual owners. Higher taxes on these entities result in less money for investment and expansion, which translates into fewer jobs created and fewer opportunities for those who want to move up the economic ladder. Tragically, and especially in this time of economic stress and high unemployment, the real cost of taxation is paid by a group of unintended victims. These are the men and women and their families who do not get the chance to have a job or a higher paying job because the tax destroys the economic growth that might have provided for such an opportunity. Madam President, a study recently released by the Nonpartisan Heritage Center for Data Analysis highlights these facts. This study, which utilizes an economic model owned by the leading economic forecasting firm in the country, concludes that the President's tax plan to allow the tax relief provisions to expire for the so-called well-off would have very serious consequences for millions earning far less than those targeted. Now, here are just a few of the highlights of these conclusions. First, the President's tax plan would reduce economic growth for at least the next 10 years. Over the 10-year period, our gross domestic product would fall by a total of $1.1 trillion compared to where it would be otherwise if all the tax provisions were extended. This slower economic growth would directly translate into fewer jobs created. In fact, the study projects 238,000 fewer jobs would be created next year, and as many as 876,000 lost jobs in 2016. For the 10-year period, the average would be 693,000 jobs each year that would not be created had we extended the tax relief for everyone. Now, this projection alone should be enough to give anyone pause. In this critical time of job shortage, do we want to purposefully choose a course that would lead to even fewer jobs for Americans? Other economic indicators would also turn negative compared to extending the tax rates as they currently stand. Business investment, personal savings, disposable income, and consumer spending would all be lower. This is exactly the wrong direction we need as U.S. struggles to recover from this nasty recession. My home state of Utah would not be spared, despite the fact that the downturn has been less pronounced there than in many other states. The Beehive State would lose an average of 6,200 jobs each year, and household disposable income would drop by $2,200. For a relatively small population state, this is nothing but bad news. Another recent study highlights the effect on the economy of increases to the capital gains tax rate as is called for under the President's tax plan. This one was prepared by the respected economist Ellen Sinai. In this study, Dr. Sinai concludes that increasing the capital gains tax rate to 20% from the current 15%, as is called for in the President's plan, would cut the number of jobs available by $231,000 per year. Again, this is exactly the wrong direction for a Congress that is supposed to be focused on job creation. If we were really serious about creating jobs, we should be doing just the opposite. That is, lowering the capital gains tax rate. The Sinai study concludes that a reduction from the current 15% tax rate on capital gains to a 5% rate would increase the number of jobs by 711,000 per year. Now, that is the kind of job growth that we need right now. And by lowering the rate down to 0%, Dr. Sinai says we could turbocharge this rate of job growth to 1.3 million new jobs per year. Of course, this capital gains tax reduction would not be free, since the Treasury would lose some revenue. The Sinai study indicates that this loss would be about $23 billion per year after the effects of stronger economic growth are taken into account. And while this is not an insignificant number, it works out to a cost of about $18,000 per job. I call this a bargain, Madam President, particularly when it is compared with the cost per job from the so-called stimulus bill we passed last year. The Congressional Budget Office projected last year that the cost of each job saved or created from the stimulus bill would be between $414,000 and $1.3 million for each job. And most or all of these jobs are temporary, not permanent. The CBO last year also projected that the net increase in the number of jobs from the stimulus bill by 2015 would be 0. In other words, we will get no permanent job increase from this gargantuan stimulus bill. Now, Madam President, I do not believe the contrast between the two approaches to job creation and economic growth could be any more striking. Let me refer back to Senator Grassley.
Well, Senator Hatch, the only thing I would add to the good work you've put out there is maybe to say a little bit more about the estate tax. And that is, if we don't do anything, you can see the House passed death tax reform, but not the Senate, and obviously we don't have a final bill. And if we don't get a final bill by the end of this year, instead of having no estate tax like this year, or $3.5 million exemption last year, we're going to have only $1 million exemption and a 55% tax rate, and that's going to be catastrophic on small business. It's going to be catastrophic in the rural areas. So I hope that emphasizes the importance of getting something done on the estate tax ahead of time. And the only other thing I would add would be, because you did such a good job of saying what the economic consequences are, if we let the biggest tax increase in the history of the country happen by sunset, December 31st, and then that means you go back to the tax rates and tax policy of the year 2000, it's going to be very destructive on job creation for small business and very destructive as far as bringing certainty that business, particularly small business, needs if they're going to hire people. I had a news conference last month in my state, and I brought in some small business people. And one of the small business people testifying for me said to the media of Iowa that they would like to hire 5 or 6 people. But as long as there's all this uncertainty about what the tax policy is, they're not going to move forward. So what we have to do, and I think you've said it several times, Senator Hatch, and particularly for small business, is we got to bring certainty to the tax code. And you can't have this uncertainty of what's going to happen after December 31st, particularly when you're certain that you're going to have the biggest tax increase in the history of the country without even a vote of Congress. So I want to compliment Senator Hatch, and I won't have anything more to say on this subject until we get one of these pieces of legislation up. But thank you very much for your leadership.
I thank my leader on the Finance Committee on the Republican side. I appreciate all the work he's done to try and keep this economy going, and we ought to listen to him. Let me just say the President and congressional Democrats and Republicans agree that small business is the key to a job-based recovery. As the President himself says, small business creates about 70% of all of our new jobs. If we fail to prevent the marginal rate hikes, small businesses will be especially hard hit. The Joint Committee on Taxation concluded that half of the flow-through small business income would be hit by the reimposition of the top 2 brackets. Ironically, this is what all the resistance from the other side is about. They insist on raising the top marginal rates on small businesses by up to 17 to 24%. All of this during a time when we ought to be going the other way and assuring small businesses that they should take steps to grow without paying a tax penalty. There is a bipartisan group that recognizes the merits of preventing these tax hikes on small businesses. But the President and Democratic leadership, I think, need to see the light. We're talking about somewhere between 750,000 and 800,000 small businesses where the 70% of the jobs are created. And if we don't handle this right, we're going to have a pretty long time of an economic system that really doesn't work in this country. So it's important that we get going here in this lame duck session and resolve this issue. Now, there are people all over the map on this issue, but I think the smartest thing to do would be to keep the tax relief the way it is, and I would move it at least 2 years and hopefully 3 years. Now, I'd like to make it permanent for everybody in our society, because we are a high-tax society under the current circumstances. And, but it's apparent we don't have the votes to make it permanent. But we should have the votes to be able to put it over at least until we can get out of the rough politics of a lame duck session. And hopefully we'll be able to resolve these problems in the future in a way that both sides can feel good about. Having said all this, let me just say that I have really appreciated serving under the distinguished senator from Iowa. He is a hard-nosed, practical leader in this body. Everybody knows he's totally honest and totally effective in so many ways. And he's a dear friend of mine. I just want him to know how much I've appreciated serving next to him on the Finance Committee. And we'll be serving next to each other on the Judiciary Committee in this upcoming year. And I look forward to seeing him, as a non-lawyer, take over the controls from the Republican standpoint on the Judiciary Committee, because even though the distinguished senator from Iowa is a non-lawyer, he brings a practical balance to the Judiciary Committee and to the Finance Committee up till now that is sorely needed And he's one of the most respected people by me in this whole body of very, very strong minds and people. So I'm grateful to him. I'm grateful that he's my friend, and I'm grateful that we can work together side by side in both of these committees. And I just want you to know that I want to thank you for all the hard work you've done on the Finance Committee all these years. I've watched you, I've sat beside you, I've seen the products that you've done, and you've worked in good faith with both sides, and certainly total honesty. And that's a high accolade right there. Madam President, these are important issues. I know that not just the distinguished senator from Iowa and myself feel deeply about them, but I hope we can get our colleagues together on both sides and the President, who has indicated he's willing to compromise on this and get this put over. And if we could do that, I think the President will be better off, jobs will be better off, and in the end, our country's is the ultimate goal, and there's no doubt in my mind it would be much better off. With that, I thank my distinguished friend from North Dakota and yield the floor.